Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, September 21st, 2024. We've got a great show lined up for you. I'm Harvey Freed. He's Harry Glanz.
Great show, Harvey, and big news. You know what the Fed did? Fed blew everybody's mind, Harvey, and I could go on these airwaves and say that I was wrong, Harvey.
That's okay. We're going to get to all of that,
It was a
Harry.
classic hedge, though. It was
No,
a classic
you actually
Glanz
did
hedge.
say that they had to go up 50 basis or go down 50 basis points. You did talk about what they needed to do.
I said what they needed to do,
Yeah.
but they surprised everybody by actually doing something that needed to be done right out of the gate. I said a quarter. A lot of people said a quarter and went down 50 basis points. That's phenomenal for everybody out there, but we're going to explain what that really means in the real world, okay?
Yes.
So it just doesn't mean that automatically on that minute that mortgage rates went down 50 basis points or a half a percentage point, because actually rates went up. But we'll get into that. But everybody out there, when you get a call, public service announcement number one for the day, when your loan officer calls you and tells you that they're going to get you in line to do a refinance transaction, listen to them.
There you go. That's
all
a
you
good
gotta do is
idea.
Just listen to them.
Hey, Becky, you brought in some unbelievable guests this morning. Go ahead and introduce the panel.
Yes, we have the one and only Kim Agemy and Maria Kopicki, right? Did I say it right?
You did.
All right,
Thank you.
perfect. Yeah. So we're super excited. You know, we had an opportunity to get both of these powerhouses in the room. And obviously, you guys know our, loyal listeners, we put nothing but the best of the best in the room. So that way we can educate you on the home buying process, what the market's doing, the specific programs that we're able to offer our buyers, and just really what's going on in the community, because Kim is also extremely dialed into the community and just doing high level things all the time. So welcome, ladies.
Thank you.
Thank you for having us. And I want to thank you because you do so much in the community, and we're here. Part of this came from Ditch the Hills because you were a sponsor and you showed up, and you pour so much in the community. So all these events and things I go to, you're always there showing up for others. So I just want to thank you.
Thank you. I appreciate that.
Kim, of course, you're with eXp Realty and Coldwell Banker for Maria. So you guys we're very diverse here on the show, always giving great information, always looking out for the client's best interests is really what that's our expertise, is really hooking up everybody with their situation. So that's key. We give you 1 hour of the Hardcore Mortgage Real Estate Business Show, taking your calls, 248-539-9797. The best news of all, guys, about 2% lower in interest rates currently from where they were earlier this year. So that alone really gets people excited about home ownership. And I think, Becky, more so, it's going to really open up some inventory where people that have been sitting on those real low interest rates, the sellers like, I don't want to move. I don't want to lose this rate. Now it gives them an opportunity to sell and do what they need to do, move somewhere else, downsize, upsize, or even go ahead and retire.
Yeah, I agree with that. I mean, we talked about like the time to buy is always when it's best for you, right? So when we're talking about this stuff, it's, we're speaking to the person that's ready to make that move, right? So we're like, oh, it's always a good time to buy. Well, it's a good time to buy when you're ready to buy. We talked about the interest rates moving and that kind of stuff. And, there is a lot of inventory that got locked up because people are secured by their golden equity handcuffs at their 3% interest rates that they don't want to forego. But I feel like now that the rates are going to trickle, we are going to see a little bit more of that inventory, but we're also going to see an influx of buyers. So the inventory that comes up is going to be almost irrelevant because there's so many buyers still that are trying to get out from renting, or they're downsizing themselves, or the step up buyers that are, stepping down. I mean, so whatever inventory that's out there, it is going to be obsolete in my opinion as soon as it comes up. So you have to have the conversations immediately.
Yeah, I want to ask the ladies, this is the point blank question. Whoever wants to go first can go first. Are you projecting that you're going to see more inventory come on the market? And if the answer is yes, how much? Is it going to go up dramatically?
Ooh, Maria, you shook your head. Okay, give us your opinion on it.
Yeah.
That's good enough.
I mean, it's so hard to predict what's going to ever happen in the industry. I mean, people right now, they hear you, they say date the rate, marry the house, or make, whatever the saying goes. I think that it's hard to predict that because when we had a lot of inventory, then people are making multiple offers and losing out. And so if we do get more inventory, we're going to get back to that situation where we're going to see. But even now, there are situations where certain homes, if they're turnkey, people are trying to make multiple offers. And if the house is not turnkey right now, ready to go, then
it's not going anywhere.
It's not going anywhere. And
right.
The price, I'm getting price reductions in my email every single day. So people who thought they are going to get top dollar for their homes and are, shooting for the stars and moon, are realizing, oh, well, my house isn't as great as I thought it was. And so that's a hard question. It's
Let me give you the why I asked that question. The reason I asked that question is because everybody thinks that there's a perception out there because rates are going to come down that more people, as Becky said, they're going to unlock that and they want to sell the house to gain, right? I believe, this is a firm belief that I have, again, it's just my opinion, is that, okay, rates are going to come down, but they're not going to go down to the 3.5% level. It's just never going to be there again. So my opinion is we're never going down there. It's not going to happen. It never happened. It was a lifetime situation. It was a COVID situation. It was a once in a lifetime.
It was a manipulated situation. It was manipulated.
It's never going to happen because in the 1960s, rates were at 4%. They weren't at 3 and 2.5. They were at 4. I speculate that we're not going down to 4. So I think if we go ahead, and the reason I asked the question, do you see more inventory coming on the market, is because people believe that because the Fed made this move, and it's going to be an easing process, a slow easing process, that people are just going to wait and try to hit the bottom of the market, which never happens. No. It doesn't happen. So I guess the best case scenario is, yeah, rates are going to come down. They're going to come down incrementally, slowly, and people have to get on with their life. If you're going to sell your house, sell your house. If you're going to buy a house, buy a house.
Yeah.
And I just don't see a ton of inventory coming on the market. That's why I want to ask you guys, the professionals.
Well, something I think that people need to educate themselves and they need to talk to a professional. Here's why. Your interest rate may be locked in low, but then people are racking up credit card bills.
Oh, yeah, I was going to go into that. Yeah.
If your credit card bill is a
segue.
higher percentage and you're thinking, I'm not going to sell my home because of that, if you actually talk to a professional, talk to a lender, and you look at what you're actually going to be, you can actually save money. And it can be a perfect time to sell. And you're never going to sell at the very top and buy at the very bottom at the same time.
Doesn't work
but
that
if
way.
if you're in a market that you can sell high and you can buy reasonable, and you're right, when the inventory goes up and you get a lot of buyers, you do get into multiple offers and people trying to come in and pay. We have people paying with appraisal guarantees.
Yes.
Right? And missing out on homes.
Ridiculous appraisal guarantees.
I mean, with what you were just touching on, though, like what behind the scenes that we see is, during COVID, 2020, the rates when we're talking about were the lowest they've ever seen in the history of ever. Okay. The history of ever, people were like, everyone had cash, everyone's buying cash, whatever. Well, now that $300,000 buyer bought a $500,000 house. And now they have $500,000 house taxes and they can't afford those taxes. And then because they are so thin, because those taxes uncapped, they are now racking up their credit card debt. And then the inflation came in and now they have this overextend on the credit card debt and they're going to clinch their pearls over a 7% interest rate, but they have no problem paying 30% on a credit card or 7% on a car loan that's going to give you a $1,000 car payment. We see it all the time. So we have been doing refinances all year long to help navigate people in this situation, because when you own a home that is not to be used as a piggy bank, but that is an asset that you can tap into to put yourself in a better financial position. And when the rates come down, you can always refinance again and put yourself in a lateral position. But you have to be with high level loan officers, high level professional people in the industry. They're going to help you get to where you're going to go and use that asset as a tool for sure.
Many reasons to refinance a house. I'm glad you threw it in there, Kim. Could definitely debt consolidation plays a part as inflation's been a little heavy in a lot of families here. And as much as everyone's working in town, the cost of goods have been a lot more. And we saw it on the higher interest rates really affecting car loans. And I think that takes a big chunk out of families' income each month. So that's really going to cut into what you're going to be able to purchase. And then I like it, Maria, on the other end of things. There's a lot of equity in your house. I mean, this is crazy stuff. You bought in 2018, 19, and 20. You're probably a third higher in value on your house. So there's a lot of equity there. You said prices might be coming down on some of these houses. Just give it another couple days here. And if these rates do trickle down, we will see more and more buyers out there.
Yeah, people are they're seduced by the amount of equity they have in the house. But I'm sure you ladies are thinking to yourself, okay, so you've gained equity in the house, but the prices in the market have gone up. Where are you going to go? Right? Where are you going to go? And you're going to realize that equity. Remember, you're going to pay more for a house. You're getting more out of your house. You're going to sell your house probably for a little bit more, but you're going to pay more on the other end. So for us, it's financial health and financial well-being. It's how much money can you save, right? The interest rates are irrelevant if you're paying 22% on your credit card. It doesn't matter. It's how much are you bringing in than how much are you laying out every month. And we believe that we can go ahead and through financial health and well-being and education, we can save you money. That's just how we believe.
Yeah, and to the point of the values coming down and price adjustments, I think that's where you again need a professional. Some of those price decreases are because, one, did agents price it right? When I price my house right, it sells, and I'm not looking at price decreases. And so when you look at a blank, prices are coming down. Well, I always tell my clients, we're going to look at every house we look at. We're going to look at, was it priced right to begin with? This house, you might have to go over asking. This one, we can go under, because it's all about where that price started to begin with.
Yes, I think that there was a lot of, like we were talking about, the sellers think that their houses, everyone's got the $1 million house, right?
That's where I'm at with that, because I have some listings where they are sometimes not very realistic on the value.
Yes. Okay, so let's stay there for a second. Okay, so for our listeners, okay, and you're looking to possibly sell, how are you navigating that conversation? Because in their mind, they think they're going to get the top dollar. So when you're in there and they're like, no, I want to sell my house for $500, when you know it's priced right at $430, well, you'll get multiple offers in that situation. So how do you navigate that conversation when they push back?
So that's one thing I do, is I always try to provide comps and show houses that are compared. If their house is turnkey, and for those who don't know what turnkey is mean you walk in it and you have to do absolutely nothing. Absolutely beautiful. White quartz counter, white shaker cabinets. Everything is completely updated top to bottom. If it's like that, then yes, they're going to get top dollar for it, and it shouldn't be a problem to move fast. And people are going to pay over and make appraisal guarantees. If it's not, then you know what? We do our best we can.
Well, I was out there rolling in South Line last night. There's new construction everywhere, from your side of town on the east side, on the west side. I see everyone out there, all the great builders. Keep it here on 97.1 The Tick, and we come back. 248-539-9797. We'll be back. Back to the show. Can't hear you. We'll put the headphones back in. 9:15 if you're just joining us. Again, we are brought to you by Capital Mortgage Funding, powered by CMG Home Loans, Equal Housing Lender, NMLS 1820. Some great news out there besides the Fed funds cutting rates, and it's just a step in the right direction here. I'll clarify that in a little bit. But also, Becky, we had a little bump in the conforming loan limits last week. So a couple of things that made headlines. Single-family housing went up to 802,650. I can run the 2 and 3 and 4 unit. But yes, it's just a little bit lower interest rate, less qualifications, but still, it's very easy to get a jumbo loan. Everyone qualifies.
Yeah, you're like, everyone can get a jumbo loan, la-di-da, right? But like, think about it. Okay, so like, it was 415 was the max conforming loan limit forever. And then now look, we're in the 800s. And so that just goes to show. So the people that are waiting for this housing market to crash and this bubble that is imaginary, you have to hear what we're saying, because there is appreciation in the market. And when Fannie Mae and Freddie Mac, because they have tight belts. Okay. So they're never going to repeat yesteryear's mistakes. All these loans that are out here are well qualified. So when they're coming out with high level loan limits like that, it's because income is a little bit increasing, housing is increasing, and it's allowing individuals to get into a conforming loan versus jumbo, because the underwriting restrictions aren't as stringent, if you will. But that means that we are stepping in the right direction. We are an appreciating market. And like I said, when the big boys up top beyond my pay grade make announcements like that, it is because they have done their due diligence and they know that this is the step of what the direction of things are going.
Yeah, it's generally going to be confirmed by Thanksgiving. A couple lenders are speculating what the amount's going to be just based on the indicators in the housing market. So when we talk about the Fed funds lowering the interest rates, what does that mean? It doesn't mean that they're lowering them to me and you. It means that they're lowering them to the people that they do business with. Who do they do business with? The banks. So the Fed lends money to banks, and their overnight lending rates just went down, which is good. Now, it's the first time since 2020 that they lowered rates. It's going to be a slow process, and they're projecting another 2 cuts in November and December. Fed meets again in November. They don't meet in October. They meet in November and December, and they're projecting another 25 basis points or another 50. They're projecting it to go down. If you have 2 more meetings and they project another 75 basis points, that means one of the meetings is going to be 25 and one is going to be 50. So that's what they're projecting. Again, I haven't bought into that yet, but the bottom line is we're going to see decreases, and we're going to see a very healthy winter, and we're going to see people that are going to be able to save money, because if you bought a house in 2024, your rate was north of 7%, right? Most likely in the 7.5 range. So what we can do is we can lower it to under 6.5 probably. So there's going to be an opportunity to save money. People say, well, here, why should I do it now? Why shouldn't I wait? Because they're going to go down. Because every month you're making a payment at a higher rate. What are you waiting for? I mean, I don't get it. If we could save you money now and then maybe save you money next year, what are you waiting for? You're just going to be late. And every month you're writing that check, or it's being directly taken out of your bank account. You're paying too much money.
Can I ask a quick question? Because
Sure.
I work with a lot of first-time buyers that might not know what how the 0.5% of rate will impact them.
Yeah.
So let's say it drops to 0.5%. How much would that affect a monthly payment?
Such a great question. I love that question. It's like you teed it up for me.
All right.
So if somebody got a rate at just, we'll use 7.5, $100,000, and it went down to 6%, a full percent, right? You know what they're saving on $100,000? $65.
A month.
Okay, a month. So if it's $200,000, double it. If it's $300,000, triple it.
There you go.
So that's the number. So when we look at it, there's real savings depending on how much of a loan you're taking out and how much we can go ahead and qualify you on the buy side. So people are saving money. But the answer to the question is, don't wait. I mean, don't wait, because the more you wait, if you're a realtor and you're showing people houses, you can bet that house right now, if they buy it right now, is it going to go up, Becky, or is it going to go down next year?
I'm going to say it's going to go up. Circle gets the square.
Ding,
okay?
ding, ding. Okay, you win what's behind door number 1.
Yeah.
So that's what's going to happen. So if you wait, you're just losing money.
So here's something, okay? So like just easy, simple math. A full percentage point on $100,000 is roughly around a $65 savings, okay? So why would you hesitate to buy, right, if you can afford that $65, right? Just get in, lock in the house for the price, right? You're locking in the price, not the payment, because you can always refinance later. That's what it's about, is you have to know that you're not married to that house we talk about,
Date
right?
the rate, marry the house.
But you also are talking about divorcing rent forever, right? Forget about the married, we're divorcing rent. And that's where if you are paying $1,500 in rent, I can very easily work backwards and find a price point where someone can buy a house for $1,500 and probably get them into a first-time buyer program. Most likely they would have to bring zero money to the table. They could even get money back at closing in some of these cases, but you have to have the conversation. So if you are thinking about buying between now and even the next 5 years, it's your timeline, not ours. But the sooner you can have a conversation and the sooner we can do a deep dive, the better, because what often happens is it works backwards. You get the buyer, then they talk to the lender. And then they're like, oh my God, I love this house. I'm in love with it. They're emotionally attached to it. Then we pull the credit and you're like, nah, you're about a good 6 to 7 months out because you don't have enough credit, or you have too much debt, or you took out this $1,000 car payment and it's over 10% of your monthly gross income. It's not going to work. But you have to have the conversations, but it's supposed to start with the lender, but it oftentimes doesn't, which is funny.
Maria, you bring up a lot of first-time home buyers, so they're getting in for 3 and 5% down. So the other caveat is that they can remove the PMI or maybe go from an FHA loan, which has MIP, mortgage insurance premium, to a conventional mortgage. So this is additional savings, and it might be just be 12 months ago. So we definitely saw the families that bought in 20, to Becky, what Becky's saying, which whoever bought in 20, Kim, in 21, they refinanced the next year. They got rid of their mortgage insurance. Home values have been taken off across the country. Regionally here in Michigan, we're still seeing between 6 and 12% in a lot of the different areas.
Right. So they're not accounting for the appreciation also. And I think it's so important for buyers to actually have the conversations before we're ready. You know, they a lot of times will go online and search for homes and they don't know what they're searching for. So when they come to us, I really try to educate them before you're ready to buy. They're like, I'm not ready to buy yet. Well, then we still need to have the conversation now so that we can help you know what we can tee you up for when you're ready. Sometimes they think they can't buy and they can. And then sometimes they need to know now so that they have the next 6 months to prepare. And then we can help educate them, get them paired with a mortgage professional, know what programs are out there, do they qualify? And then we're able to help them when they're ready. So it's still, and I do a monthly event, Knowledge is Power, and Knowledge is Power applies to everything. If you are thinking or would like to buy, talk to a professional to find out. It never hurts. And if you're educated and then you can come up with a plan, it's always a win.
Yes.
Always.
You don't know what you don't know. And I often say on here, the 3 buyer mistakes are not keeping enough money in the bank. People are like, they got cash in their mattresses. And when you're financing, you have to have cash in the bank account. It has to be documented. They think they have to have 20% down. They don't. You don't even have to be a first-time buyer, and you can still qualify for some of this grant money that's out here. So even if you're not a first-time buyer and maybe you don't have enough assets, we have programs where you can still take advantage of this free money that's out here. And the biggest one is they don't even try because they think they don't qualify. A lot of times people that think they qualify don't, and the ones that don't think they qualify, they're ready to rock and roll, but you don't know what you don't know. Don't let that negativity get in your brain where you think that like, oh, it's never going to happen to me. Just have a conversation. This is like Planet Fitness over here. Like we sponsor the gym in here. It is a judgment-free zone when you're having conversations with myself, Harvey, Harry, and these wonderful ladies in the room with us because we're here to help you, not sell you.
Becky, I got the lunk alert right here. The lunky alert. You know, I think I dropped the weight once there. And I got the lunk alert. I didn't go back. 248-539-9797. Always like to share great stuff with you. I don't even get into that experience anymore is the key. I don't care if you've been doing this for 5 years, 2 years, or 20. The experience when it comes to sellers concessions and repairs. So we talk about these great turnkey houses, but what about all the other homes that have opportunity in them? And if you're a seller and you don't realize what you have, you better start listening to maybe more than your real estate agent. Again, walked into a listing recently, and I thought it was a little moldy, smelled a little, funky and everything. And after about being there in the listing, it was an open house for about an hour. I didn't smell it anymore. So just in that 1 hour. So when people are coming to these homes and you're not getting offers, you really got to listen to the qualified real estate agents. Again, if you've been doing it for 6 months or 6 years or 16 years, the important part is that you listen to really good advice and maybe get more people involved.
Well, and I think it's important. Your home is typically your biggest asset. And people will a lot of times go, well, my friend, my cousin Mary sells homes and they do it part-time. And it mind boggles me that's your biggest asset. I just looked up, one of my clients called me, asked about a home, and I looked up the home, and I'm looking at the listing. When I pull the seller's disclosure, because I'm always going to look at everything I know before I go show that home. On the seller's disclosure, it says furnace didn't work. The agent has it listed with FHA and VA. I'm like, oh my gosh.
We got to get that fixed.
Yeah.
So that you're going to have a problem with financing. So I think you need to interview and really ask tough questions like, how's my home going to sell? I will walk through a home and I will tell the seller, listen, you need to do this, you need to do this. And sometimes I will tell them, depending on the market and the zip code. So I'm always looking at month inventory. What is the month supply to that particular zip code? And do you need to fix something? I had a client come to me and they're going to put 30 grand into a home. And I'm like, we walked it and we're like, you don't need to do that. We got them well over asking, cash offer, close quick. So it depends. But some things help with marketing and some things are needed to do but we did price it right.
There you go.
Mm-hmm.
Right. Yeah. So then we drive up multiple offers and we drive up and get better terms. So it's all important. So when you're looking to sell, you gotta educate yourself.
Yes.
All right. Education. I love it. 248-539-9797. We got tons to share with you and tons of sports coming up at 10 o'clock. Keep it here on 97.1 The Ticket. We'll be right back. All righty, welcome back to the show, 929. If you're just joining us, again, it's the Hardcore Mortgage Real Estate Business Show in our 24th year, bringing just great information, great guests about mortgages and real estate, trying to look out for your man cave, your she shed. We got tons of football coming up here on 97.1 The Ticket. Also, the Tigers are in a hunt. Took it on the chin last night, but that's okay, Harry. We'll come back.
You can't win every game.
You can't win everything.
You take a hit, so you lost. You gave up 7 runs, big deal. Now let's go out and win the next game. That's all.
All right,
That's
Detroit,
That's
of
the
course.
best thing about baseball.
Yes.
Just let's do it the next day. And we have a baseball mom in here.
Oh, yeah, we do.
Yes.
Yeah, she's great. Her son's a pitcher and, throws in the 90s. Let's go.
Yeah, I
Let's
love
just
it.
throw it.
My baseball's in my family. Jim was an All-American at Michigan.
Yes, he
Cole played
was.
at Marshall. So I love the game.
Yeah, it's in your DNA.
Yes.
All right, you know what I love too? We're going to go, you know what? Let's go to a call here. We'll take all of them this morning at 248-539-9797. So much to share with you, and it's flying by. Let's go out to Tom out there in Detroit. Good morning, Tom. Welcome to the show. Go ahead, Tom.
Hey, good morning.
Hey, what's
Morning.
up?
I'm here.
All right. And your question?
Can you hear me?
Yeah,
Yeah.
we can hear you. Go ahead.
Okay. Well, it's not really a question, but what I have is I have a frustration that I deal with in the real estate industry itself that realtors fall short of doing. And I'm not criticizing anybody. It's just not mandatory or made a requirement. But let's use an example. If I own my home for the last 20 years, my taxes are capped at, let's say, $250,000 because I purchased my home at $500,000. Well, when somebody comes in new to buy my home, they're going to make an offer of, let's say, $2 million on my home. Well, no real estate agent is going to tell that potential buyer that based on your purchase, your new property taxes are going to be so-and-so based on the millage rate in that city. You know, you use Dearborn, for example, is a good example because real estate it blows up in Dearborn. And if you purchased a home for, call it $200,000, your taxable value is $100,000. Well, when you buy it at $400,000, it's now $200,000. So your taxes are doubled. And these people aren't made aware of the fact that you're going to have this dramatic increase in your property taxes. That's my comment.
Okay.
All right, so I actually am glad you called in with this because I'm going to poke holes in it because we actually do have those conversations. We actually had a
100% of the
Michigan
time.
assessor on the show. She was fantastic. Shout out to my girl. She's great, and she actually has master classes where she educates the real estate community, even on the new people, right? But on the lending side, we are absolutely having these conversations no matter what, because we have to make sure that we're setting people up for success. We're not looking right at our nose. We're looking down the road. Like, where are you trying to go in 5 years? And I agree with you. In Dearborn, there's a lot of like tear downs and rebuilds, and Dearborn is blowing up, exceptionally. But I know that the real estate professionals, I can only speak for the ones in the room. They do have these conversations.
I can touch on that myself because I work with some people who are maybe not aware of this, and I always tell my clients, especially buyers, I like to stay in my lane, and that is a question for the lender to talk to. And so if you have align yourself with a great lender, the lender will be the one that will tell you down to the penny what your new taxes will reassess at. And that's a very important conversation to have. So yes, we do that.
I would say, Tom, your experience is your experience and you're dealing with people that, don't know. I can tell you that our experience is 180 degrees from that.
Yeah.
Everybody knows that when they buy a new house, there's going to be an increase in tax. And actually, we tell them that when the assessments come out, and they usually come out before February, and if they don't, you got lucky, that your taxes are going to go up. So your experience is what you're experiencing. We appreciate the call, but I can tell you 100% certainty on our end, and the people that we deal with know that when they buy a new house, they're not paying the same tax rate as they did that the previous owner did.
Go ahead.
Well, no, I would just want to say, Tom, you're not wrong.
Yeah.
But that comes down to the agent and the lender that you're using, which is my very point.
Right.
And if you're using a professional, if I'm going to get a painter on a house, I'm going to get multiple quotes. I'm going to see their work. I want to see what they do. If I use an accountant, I care who my accountant is. So I 100% of the time talk to my buyers and let them know about that. And I also choose my lender partners very carefully to go over that. Now, I also, like I said, teach a monthly Knowledge is power class to elevate the industry, because I think you're right. The problem, one of the tough things is when you get in real estate, you have your own business. If you don't plug in, part of the problem is, are they being taught? Is the broker teaching them? But also the agents have to plug in. So we educate, and I think that is imperative. I would never want my buyer to buy a home that they're then going to lose. My business is built on past clients and referrals, so it's very important to me for their experience to be good and for them to know that before they buy.
You can never over-educate yourself on that home or what's going on in the area. So you can go down to City Hall. So I always like this idea. If things look like they were built recently or a little funky, you can go down to City Hall and find out what permits were pulled. Now you step over to the Treasury office. You can talk to them and discuss what the potential taxes might be in the 1 or 2 different cities you're looking at. There's just so much out there that you can do. Take it a step further, guys. Open up your eyes. Again, that's really how I've had my success in the industry. That
We're
other
so
stuff.
plugged in with all the people. So even if we're not on a transaction, let's just say you have a completely different lender that you are working with. I have people call me to ask me questions to confirm that, is this the best deal? Is it not the best deal? And some are like, yeah, that's great. Keep on. You're already halfway down the road. Keep on going what you're doing. Everything looks legit. Or if it's not, I'm going to let them know. But part of that conversation is about taxes, because sometimes people are really thin when they're qualifying. And we have those conversations like, look, you're qualifying for this particular house on these taxes, but this is what they're going to change to. And is that a payment that you're going to be comfortable with? And a lot of times they don't go ahead and make that offer because we're looking down the road. Because like you said, Kim, I'm never going to put someone in a position where they can't afford their home, or they're scared, or now they got to live off their credit cards, because I have to put my head on my pillow and sleep at night knowing that I did my due diligence for each client, because we are referral based.
Yeah. But the mortgage professional is important as well. I will have somebody go online and apply online and come to me, and she's like, yeah, I'm approved. And I'm like, I need to see your approval. And it's a pre-qualification. I'm like, that is not an approval. Mm-hmm. And if you are judging the lender, the mortgage person you're using based on, oh, they gave me this rate, that's not the full picture. And I tell my clients all the time, well, you need to talk to a professional and look at rate and closing costs and all of it. Because I had somebody say they're using their credit union, and they're like, I'm using my credit union, I got this rate. I said, ask them for an estimate of closing costs. They sent it over. They had a $1,700 charge that I couldn't explain. Mm-hmm. And I'm like, sure, they're giving you this rate, but they're making up for it over here. So
that's one thing I can say that I do for every single one of my buyers. Every single house that they go to see that they're super interested in, I have them talk to a lender and break down to the penny what the closing costs are, what their monthly payment is with taxes and insurance for every single house. And it's a lot of work for the lenders, which we appreciate very much. But at the end of the day, there are no surprises.
That's not that much work.
Yeah.
But thanks, Maria.
So,
I really appreciate that. That's not that much
but
work.
when I have clients that are sending like probably 100 houses over the course of a couple of months, I feel like it's a lot. But I know you have a little formula, you might plug it in. But at the end of the day, I don't like any surprises for my buyers. You know what your taxes are, what your insurance are, and exactly how much money you're bringing to closing.
But that estimate of closing costs can vary, because some lenders will leave off the tax part and how many months they're escrowing to make it look
fired
good.
Up about
that. Not the ones that I work with.
That comes down again to the professional. So if you don't know your taxes are going up, they'll do a low estimate on taxes because they're trying to make it a better offer, and it's not.
Well, their taxes, and they'll leave off the taxes,
the
insurance, the per diem interest, everything like that to make it look better. But
the bottom line is what they're trying to make it better.
We'll know that right away. We'll take a look at it. We can sniff that out right away. And again, ladies, it goes something like this. We take for granted what we know, and we do it 100 times a day.
Yes.
Everybody out there, they don't do it 100 times a day. They do it once every 7, 8, 10 years. So we have to go ahead and we have to be slow, and we have to go ahead and go over everything with everybody every single time, because we can't take it for granted. I take it for granted that Tom called it, and I took for granted that everybody knows what when they buy a house, their taxes are going to go up.
Yeah.
I think everybody should know that.
I agree with that.
Do.
They don't.
However, they don't know that, and he's absolutely right.
Yeah.
But we take it for granted that because we're on the market and we do it 100 times a day, that people know these things. They don't know. So everything has to be gone over.
It's a piece of cake to make a cake, right? But the rate is a piece of the cake, right? The taxes are a piece of the cake, right? What you're bringing to closing is a piece of that cake, right? And then you get the whole cake, right? So you got to make sure.
Love cake.
Yes. Yeah. Piece of cake to make a cake. But I will say I agree with you, because we function at such a high level, and the ones that are professionals, full-time agents, full-time loan officers, right? We answer our phone, right? You can't just text somebody because tone is missed in text. You have to have verbal conversations. You have to have like verbal conversations with people so you can hear their heart and what they're talking about and all that stuff. But you have to have the deep dive conversations. When someone is sending me their estimate, they're like, well, you're higher by $1,000. I'm like, okay, well, that's because they're underfunding your escrow account right now. And the escrow is your taxes and insurance. And that's an easy way to manipulate numbers that a professional is going to identify that your average consumer has no idea. The other one thing I want to touch on is APRs. People are like, well, what's your APR? What's your APR? What's your closing cost? So there are some lenders that charge an application fee. An application fee is not counted in the APR. So you can have the same APR as somebody else, but their fees are higher. And that's something, again, that the average consumer isn't trained to identify, but we are. And we're just say side by side. And if someone is beating us, which is rare, go do that. If someone's telling you you're getting 4% in this market, you go find that. You go get that rate and you lock it in. I go, and I want to see it because I'm going to go there too.
Go pay your 6 points.
Kim, you in the real estate world, and Maria, of course, it's always location. We heard that forever. In our world, it's communication. And again, if you've already got a stinker house and if you notice that your agent's not really communicating, you got to reach out a little bit. All right, that music says we're going up to a quick break here. 248-539-9797. We'll be right back. All righty, we are back in our last segment, having a great time here this morning with great agents, Maria Kopicki, Coldwell Banker in Birmingham.
Hello.
Hey, Maria, you can buy me lunch this week. I'm coming by, right?
Okay, let's do
maybe?
it. 20 Miro, let's go.
We'll do it. And, of course, Kim Agemy with eXp Realty. You guys got a lot of energy and great information. The great agents are the great agents, no doubt about that. We take your calls at 248-539-9797. Maria, you wanted to go into some first-time homebuyer stuff maybe even.
So I get a lot of calls from people who are maybe looking to rent, and they say, oh, I have a 720 credit score. I'm looking to spend $2,000 a month. And, so why do you want to buy or why do you want to rent instead of buy? And everyone has there's a perception or misconception or whatever you want to call it out there that they need 20% down and they need all this money. And there's so much grant money available. And it's not only just for first time buyers. There's money available. There's like down payment assistance. And I'm not talking about the government programs like MIJDA that you have to pay back after you sell. I'm talking about there's different programs throughout, and I know you guys have a lot of access to those programs, but there's like down payment assistance, $7,500, $10,000, 3% of the purchase price, and then I'm helping sellers get concessions for my buyers. So I've had multiple buyers who come to closing and they get their entire earnest money deposit check back, and they're bringing zero. So they thought they couldn't be homeowners, and they're almost in tears that they actually own their own home and are earning equity.
Yeah, what we always hear is, I can afford the monthly payment. I just don't have a down payment. Well, What Maria is saying, what we can show you is there are down payment assistance programs out there where you don't have to come up with the money. The money will be there for you. If you have a great rent history and you can pay $15, you can show that you can make the payment, then we can get you into a house. Becky talks about that every single day, 10 times a day, that she's been helping people for years now, almost 20 years.
Pay your rent on time.
Get into these, right. So you have to pay the rent on time so we get a good verification.
And claim your income, because I work with a lot of people who are independent contractors or 1099, and they make $100,000 a year, but on paper they make $20,000. I'm like, listen, dude, you're not getting a house.
Oh, I love your segue. I love the self-employed segue.
I love,
yeah.
And you don't go buy a car. I just had another client who's in the middle of and he's like, you told me I can't go buy anything, right? Because I want to go buy furniture. Don't buy anything.
Well, a lot of great
there's
CPAs,
a lot of self-sabotage out here.
Yeah, I mean, when you sit down with your CPA, I know, because Harry knows more than I do, a lot of CPA, they're discussing this with you. Of course, self-employed individuals could make $500,000, millions of dollars. It all depends what you're paying your taxes on to qualify. And, we have plenty of self-employed programs out there. There are some alternative programs, 12-month bank statement programs and such, Becky. But the key is, again, all the programs, the right people, and build that team.
Yeah, so back to the down payment assistance programs, right? So right now in the US of A, there are more down payment assistance programs that there's ever been in the history of ever as well, because they understand that the affordability became an issue. Their rates came up. And that's why these grant programs, or like they're trying to, give back to the community in these certain banks, right, that we have access to as well, because it is the affordability, and they want people that are going to occupy the home as a primary residence to take up the inventory versus the investor coming from the outside in, gobbling up the inventory, because then there's going to be capitalized on the rents. And they want people to invest in these neighborhoods, build their own equity, build their American dream. So you do not need to be a first-time home buyer. So if you are renting, or you've had a home in the last 2 years, you got to sell to buy or whatever, you can still get a part of this money, but you have to have a conversation with somebody. Some of the grants are based off the cities that you're buying. So we have some programs where a specific city, you're going to get up to $14,500. We have $10,000. We have one where it's 1% down, up to $6,000 back. And you don't have to be a first time buyer for that program, but you don't know what you don't know. And so it's our job to identify what is the vehicle that's going to get you where you're going? Because not everyone's GPS is the same, right? I'm not going the same direction. My financial profile is different than everyone else's in this room. But you have to understand that we are professional individuals making individual experiences for people, and it's high level. And if it's a matter of you getting into a house or not getting a house, we have the program and we have funds available to get you there. And even if you don't need the money, why would you not take advantage of it in some of these situations? And it's lower interest rates in some of these cases as well.
We have some open lines here, 248-539-9797. No doubt about this. Fed rate cut is likely to usher in more competition, higher housing prices. Purchasing now, slightly higher rate and lower prices could be a less expensive option for you. That's what we're talking about here. Get in now and set that price. So lots of information out there. Is the world's always changing, and things to look forward to here. We have a wonderful home buying season, and Kim, I don't think it's going to change. I really feel now that this Fed's looking in this direction. Again, hasn't really reduced the interest rates, maybe even burped them up a little bit. but definitely over the next months, this could be a good window of opportunity for you. A lot of buyers do get on the sidelines for whatever reason. The holidays come up. Maybe they're going to do it next year, but really this great window of opportunity, I think always September through Christmas time.
I will tell you, and people talk about spring, October tends to be one of my best months.
Yeah.
And I have to tell you, my last December was rocking. I had a ton of closings in December. So, I think it still comes back to, like Becky said in the beginning, it depends on what your situation is. People get divorced, people get married, people need a bigger house, people get relocated. There's a lot of different reasons people move. So I think that if you're waiting to the bottom falls and I'm waiting to spring and, then you have more competition.
Mm-hmm.
So you need to come and look at what your scenario is. Why are you looking to move? What works best for you? And that's what I try to do. I am big on consulting. Let's talk about what that looks like.
I have
and
a
what
question for
you.
Becky. Regarding seller concessions, where the seller will pay money towards buyer's closing costs and even grant money that can be used towards seller closing costs, what are your thoughts on having that be used to buy the rate down? Do you think that that's a waste of money because rates are going to continue to come down? Or do you think that that's something that is worthwhile looking into for someone to buy at 0.5% that you said, like at $100,000, $65 a month?
So it's situational, right? It depends on what is happening in that, that specific transaction. So if there are concessions left on the table and it's not going to so let's just say we have a down payment assistance program and then there's also another $5,000 in concessions that the seller is ultimately paying for. Well, then yes, you would take that and you would buy that interest rate down because that's not anything that's out of the buyer's pocket. But if, let's just say, concessions are not on the table, there is a threshold where it no longer makes sense that you're going to buy the interest rate down so far because we know that we're going to eventually see a little bit lower interest rate. So you have to identify what is the payback. And if most consumers do not stay in a mortgage for more than 5 years. So if we are looking at what the current rate is and then you're paying points, I have a very high level conversation and say, these are the rates, these are what it's going to cost. And I personally wouldn't go beyond this mark. But if this is something that you want to do, okay, I'm the backseat driver that's going to talk a lot. But if you want to go right versus left, I'm cool with that.
So my question would be then, if let's say you have $3,000 extra in seller concessions, would your recommendation be to use that to buy the rate down even further or maybe reduce the purchase price? What would be in the best interest of the buyer?
I'll go with that. I'm going to go reduce the purchase price. I like that. Keep that, or, once you've already maxed them out, keep the money in your pocket.
I just like to make sure my buyers are very well educated.
Yeah, so you talk about both options,
like
right?
That,
so if you're going to leave money on the table, if you don't need it and it's not making, because like we talked about, 1% is going to sometimes only be $65. But again, for every $1,000 that your loan amount drops, it's $7 to the payment, right? So you have to look at both those scenarios and what is the best for them and where they're going. Because I'm not here to dictate, but I'm also going to educate them on each scenario each time.
They used to have these parties called, what do they do? They would burn the mortgage?
Burn the mortgage after it was paid off.
Oh, okay. Yeah, that's the idea. So you started a $200,000 or $400,000 mortgage. When you're at zero, that's a really cool day. And I'm looking forward to that myself.
So everybody was talking about, and you don't hear it much now after this week, about a 2-1 buy down or buying down the rate. Okay. But what people don't understand is the effective rate after the 2 years is higher than the current market rate. All right. So you're not getting a deal. All you're doing is you're putting it off, right? You're putting it off. So if you use money, not in your scenario, but a scenario, if you use money to buy it down now and rates are going down, you've just wasted money. I would rather see people take the extra money and either put in home improvements, buy the appliances or furniture, or even pay down the principal on the note. So it's all in the math and it's all in somebody's individual circumstance, and we can work that out for you. But the question is a good question. When do I go ahead and pay money to buy down a rate? Certainly, if it's coming out of your pocket, not right now. But if there's concession money left on the table, then we have to make a decision.
Yeah, that's a totally different conversation. I often see there's a lot of lenders out there that are pushing for points. So to the point that I had someone there, I wasn't on the transaction, but someone saw, she was an older lady on a VA loan. She was getting charged $15,000 in points on a refinance. And the title rep called me right there at the closing, was like, I don't feel comfortable with this. Is this legit? I was like, absolutely not. And so when I got involved, we were able to drop the loan amount $10,000, get the same rate for 0 points. It was she didn't know any better, but I'm glad that we have such great connections with everybody, whether it's title, attorneys, real estate agents, that she knew that I was going to be forthright with her and say, yes, no, yes, that's a great deal. Or
I
no.
think that's really important that you said that, because I have a couple clients that worked with a separate mortgage broker that charged like this astronomical mortgage broker fee at closing. And where my assistant, my transaction coordinator, notices, and I'm looking at the settlement statement, and it didn't seem right. We've never seen that before. And then you talk to them, and their response is, well, the lenders are basically baking that into the rate, so they might give you a 5.9%, and the so and so lender is going to give you a 6.1%, but and they're not going to charge you the fee, but then they're charging the fee. So that just gets super confusing. So I don't know if you guys can touch on that a little bit.
So what you just said, nothing's confusing about that. But 5.99 looks really cool versus 6.125. Fine, because you got a 5 there. Right. But the difference in the payment is minuscule. Like, stop it, get out of here. Right? Why would you pay like some ridiculous point just because it looked cool on paper to have a 5 in front of a 9? Right? Exactly. It's just so like all that. Like, it sounds confusing, but that's again where you have people that are involved in these relationships with these certain particular lenders or whatever, and it's not doing anyone any good with putting someone in a position where they're paying $12,000 in points to bake in like a fee that the brokers, how they're getting their compensation, because it has to be disclosed, but the average consumer doesn't know what they're looking at.
They don't know what's normal and what's not.
Yes.
And that's why it's important to have not only the right real estate professional, but the right lender that can guide you through the entire process and help you understand, hey, you don't need to rent. You could buy and own and earn equity, and there's lots of money available if you don't have it.
Yeah, so we are a direct lender. So we are lending our money. We're licensed in 50 states. All of us are licensed individually in each of those states. And before you know it, we're going to be all over pretty here soon. But we're working on it. I'm going to get all 50 states. I'm checking them off one at a time.
That's
but
awesome.
The reason is so that we not only are we boots on the ground locally, but you have to know what's going on nationally, because Michigan is always one of the last states to get hit with what's going around the nation.
I like that. She's the great Becky Yale, top 1% of all originators. You can check her out on Scotsman Guy. Call Capital Mortgage Funny when you want the best service and the most experience. 1-800-LOW-RATE, the best mortgage banker. That's the quickest hour in radio. Keep it here on 97.1. The Ticket. We got Pat Caputo, Mark Ryan coming up with sports. Lots to talk about here. We'll see you next Saturday.